Welcome back. We got a big deal to report. An Israeli newspaper this morning reporting that Intel will acquire Mobileye for up to $15 billion. Mobileye stock is up almost 30% this morning, so we wanted to bring that to you right away. GFI Group Chief Macro Strategist John Spallanzani already tweeting about this. John, good to see you.
Good seeing you.
Good morning to you. We have a lot to talk about today because we have a Fed meeting this week. We have a Trump rally that's up 15% since Election Day, and now the Intel deal. First off, your thoughts on the Intel deal?
I think it's a good deal, and you know it's 30% premium, so it's $10 billion market cap right now. They want to pay $15 billion, which is nice. We're starting to see some animal spirits, obviously getting to M&A. I think we're going to see much bigger deals as the year goes forward. As you know, the Fed's increasing rates. I think people are going to try to put more and more money to work and actually do some deals, both obviously on the corporate side, and I think individual investors are, as we saw over the weekend, starting to come back to stocks a little bit.
So you think if the Federal Reserve, which we're all expecting, raises interest rates on Wednesday by 1/4 point, it will be seen as a vote of confidence in this market, in this economy, that things are getting better, or do markets sell off as they typically would with rates going higher?
No, I think we're going to see the same scenario that we saw in December, where the market anticipated the hike so far ahead of time that it's really priced into the market. So I'm not expecting really a big move either way when they hike.
But the 200,000 plus jobs, Trump taking credit for it, by the way. We know every administration does this, right? But you have people on the left who are writing, oh, well, this was baked into the cake 6 to 12 months ago. He should be thanking Obama. Other people saying, well, it's the Trump enthusiasm for the economy that's pushing this. Where do you come down on this?
Yeah, I come down on this in terms, I think the Trump rate is really the U5, U6 rate, which is the deplorable rate, so to speak. So that's really 9.4%. It came down to 9.2%. So I think that's the rate he's concentrating on, right? That's kind of the people who are working, but they're not working up to their full potential, and there's people who want better work, so it's really part-time workers, that kind of thing. So I think the number was kind of Goldilocks for the market. It was 235. Hourly earnings were 0.2, so it really came in line. Also for the Fed too, right? Because it's not too hot, not too cold. It's right in the middle, so right down the middle. So Jan's got a nice fat pitch to hit the 25 basis.
You have to say though that the tone has changed, right? I mean, Donald Trump has been focused on jobs. He's been calling out companies who have factories overseas. So you have to attribute some of this change in tone to the Trump administration.
Well, obviously,
I mean, Bucket's asking you a specific question. You know, is this attributable to Obama's policies or Trump policies?
The January jobs number cannot be attributed.
This was February.
No, but I'm saying you cannot attribute anything January, February, probably even March, Maria, because anybody who's involved with human resources hiring knows that there's a lead time. The actual optimism, yes, but the actual hiring, that would kick in the second quarter.
Right.
It would be more like.
But that's what I'm talking about. I'm talking about the sentiment, the optimism.
Wait,
that's
John,
what begins it.
I have to, John, you mentioned about M&A and obviously the animal spirits helping M&A. You know that typically at the end of an equity cycle is when M&A picks up. So you think this is a bullish thing, or you think this is a bearish thing? This is related to the market.
I think there's a tsunami of liquidity that has yet to be put to work. You got $3 trillion on the Fed balance sheet.
Right.
Jamie Dimon said if they reduce regulations by just a little bit, that's $800 billion more of lending. On the cover of the Wall Street Journal today, Equifax and credit agencies are taking bad credit scores off of people's credit to allow them to borrow more. That's right on the bottom of the paper right now.
Second story.
Second story. So those are huge moves that are going to increase the amount of capital in the system. Right now, all that money is sitting at the Fed. You have $3 trillion on the balance sheet. So that money has to move off, and it's going to move off slowly, but it's kind of like a slow boil, right? You're like in the pot, and it's like, oh, well, it's kind of getting warm.
Which is why I think all of a sudden you see huge bid under this market. They have to mess up royally and not come out with tax reform in 2017 to get this bid out from underneath.
And also don't forget that compared to bonds, right, and compared to credit, stocks are still very cheap. So whether you want to say it's, you know, there's 170 stocks in the S&P right now that are trading below 17 times earnings. And well below 17 times earnings. And not to mention, the dividend yield is still higher than the 10.
Not the financials.
How long does this optimism last? In other words, how much is this dependent upon Congress passing legislation on health care, on tax reform?
Well, I think part of the reason is we went from over-regulation, right? Now we know that there's not going to be any new regulation, right? So now we still have to anticipate the regulations being rolled back.
Deregulation.
Exactly.
Happen, yeah.
So once deregulation happens, we're going to even be in a better situation. But I think the thing to remember is that under history tells us, under a Republican sweep, and it also, Gary, when the market rate goes up in December, January, and February, that's usually a good year. So I'm really more on the bullish side, obviously. I think March is going to be a slow month. March Madness, people are going to be watching the NCAAs. We have the Fed hike. We have Brexit. But I think as we get into April, May, June, we're going to start to see
We've come a very long way in 8 years when we referred to stocks under a multiple of 17, 170 stocks being cheap. Remember, 8 years ago, something like a multiple on the S&P of 17 was something people were wishing for.
Yeah, but
it just shows, you know,
and we got to
the optimism is out there.
in 99, right?
Yes, we did.
By the way, then there's trade. Yesterday I had an exclusive with Wilbur Ross, new Commerce Secretary. He is looking to redo NAFTA and looking to get to work on that within the next 90 days. Watch this.
Our activity is to try to deal with the anomalies that exist in NAFTA and update it. Remember, this is an old agreement. You really didn't have much of a digital economy back when it was starting out. You didn't have a lot of service industry activity that we have now, and that's so important to our country. So it's at worst outdated.
Does a redo of NAFTA become a disruption for markets, or do you think at the end of the day, John Spallanzani, markets like this?
I think
They're trying to create new jobs and growth.
Yeah, I think the market's more concerned about the border tax adjustment, right? That's a negative, obviously, just because there's so many unintended consequences that can be unleashed. But
he would not commit to that. He said, I want to be clear, the Trump administration has not decided on a border tax yet.
I think that we're seeing a softening in tone to China, right? Steve Schwarzman came out last night. He said that Trump is going to soften the tone to China. I think Goldman Sachs just upgraded them last night to overweight.
Goldman Sachs upgrades China
to overweight. We saw the PPIs in Asia are doing quite well, so that means the Baltic dry is up. I think things are getting better in Asia. But getting back to domestically, you know, Mexico and Canada, you know, Trump has a little bit of a relationship going right now with Trudeau, right? He needs Mexico. I think his idea is it's not manufacturing that's going to make America great again. It's energy exporting that's going to make America great again. So a lot of jobs that are manufacturing can go into pipelines, that kind of thing. And if we could get Mexico, Canada, and the United States being kind of like the new OPEC and exporting energy to the rest of the world, that's going to be huge. And I think that's the game plan for Trump.
You think that's part of the agreement that they come up with Mexico? Good analysis there, John. Great to see you.
Good to see you.
Thanks so much. John Spallanzani joining us. Coming up.